Yeah, so I think to also answer that question in terms of just being an investor and just buying in, if you're not trading, you can still achieve gains, obviously just through the growth. So like over here on the chart, if you bought just one Bitcoin at $2.24 back in 2011 and you were to cash out now at the exact current price, you know, it's worth $19,221.12 at this exact moment. That is I don't even see that number. Hang on, sorry. What is that?
So just after we have done this, we have gone off on a massive tangent, and we've got to pull this back into into trading so we can actually finish this. But yeah,
that percentage gain is ridiculous, right? 854,172% growth. You know, just from buying one Bitcoin back then. So if you were to be more conservative and say I know a lot of people who bought Bitcoin during the you know, euphoric stages of 20K, and I also know a handful of people who bought Bitcoin during the euphoric stage when it was around about $1,200 to $1,400. So let's find where that price is. Yeah, they bought around here, $1,200 to $1,400, and then it crashed or whatever, but they held on. And even at that point, if you were to have bought, say, sorry, I'll move this up a little bit to exactly, yeah, say $1,234. If you were to sell right now, that's a 1,450% gain.
And so that's, yeah.
Bitcoin. Yeah.
So it's your investment times 1,457%.
Yes, exactly. Yeah, if you were to just have bought there and then you were to sell now, that's still a pretty good gain compared to what you get from a bank. You know, whereas as a trader, you can make multitudes of trades in these timelines and make way more than that in percentages, but it all depends on your trading plan, your trading rules, your risk tolerance, your psychology, all these things that we've been discussing that obviously we can't cover everything in a weekend, but you know, there is a level of overwhelming data and knowledge that we're trying to impart to people just so we can show the spread of what's possible for you. You know, you don't have to apply everything like right at this minute, but you know, over time, there are these possibilities available to people. Like Troy mentioned before, you know, I'm just a drummer like that for, you know, 2 decades of my life. That's all I really did, aside from a bunch of other things. But to go from that to where I am today, it's not an impressive feat of like, you know, oh, I did this stuff and I'm a mad trader and blah, blah, blah. Like, it's more just like learning and making mistakes, getting back on the bike if I fall, and just keep going. And there are tons of stories that are prevalent in the crypto community of people doing a lot more, a lot better, financial results and all that sort of thing. So it is such a different journey for everyone, and everyone will achieve different results. But it's totally possible from as little as $10, $50, $100,000, whatever it is. So, yeah, that's that for now.
So I'm gonna be the big bad
Time.
Cut us off. We really must get back on track. So yes. Where are we at, mate? What we might want to do maybe is take a couple of minute break, perhaps. How's everyone feeling? Does everyone want to keep going for another kind of 10-15 minutes, or we want to take a quick break, or where's everyone's heads at?
I'm good.
I'm fine.
Keep going.
Yeah, I'm good.
I'll take that as we're going to keep going. No one said anything. So good. Yeah. Okay. Sweet.
Awesome. Yeah.
Cool.
Everyone's all in.
Everyone's all in. Let's do it.
Okay.
We're going to the moon.
I'll keep going. So, you know, when we're trading, what are we doing? We're basically pattern hunters, right? We're looking for patterns, and there's a whole library, I guess, of different patterns. It's like, think of patterns as words in a dictionary, right? The candlesticks are the letters. So you're learning a new vocabulary, you're learning how to read candlesticks. And when certain formations of candlesticks happen, then that forms words, and the words are patterns that we look at. I won't go through all of these now, but basically these black lines represent, you know, candle movements in the market, and when they form these certain things like flags or wedges or triangles, rectangles and whatever, there are certain ways to trade those patterns because they're historically indicating that the market has a probability of moving a certain direction. It's probably the best way I can explain it. When it comes to trading patterns and probability hunting, you don't necessarily have to be right all the time because every pattern has a 50-50% chance of playing out. But if you know the patterns and know what to do according to your trade plan, then obviously the potential to make money is there. Oh, sorry, I just realized, are you guys actually seeing the screen or are you seeing Troy?
Yes. No, yes, yep.
Oh, okay. Not that I don't want people to see it, Troy, but the spotlight was moved off the screen. Okay. Right, and then so what we're looking at, simplifying it, is 3 steps of trading. Is we identify support and resistance, we establish market structure and the trend, and then we identify patterns. So let's go into that. So identifying support and resistance. As you saw on the chart there, the price is on the right, and then the timeline is at the bottom, right? And what we're looking at here is a chart of Ethereum to USD. So Ethereum is one of the altcoins we mentioned before, and this is the price in comparison to US dollars. So at this point here, one Ethereum coin was worth $214.95. So when we're looking for support, what we're talking about is where is the market supporting the level of the asset or the coin we're trading. Where are the buyers coming in and holding the price up? When we're talking about resistance, where are the sellers coming in and keeping the price down? What's the ceiling? And so over here, support is always below price and resistance is always above price. And so when we're drawing that in, that's the current price here. Support is this black line. In this case, for this time period, so this is a 1-day chart. So each of these candles is worth 1 day. And you can see that over the last couple of days, the price has been supported roughly above this line. It's a bit of a range, but it's been supported above this line. And it's hitting this resistance. See these tops? Every time it's come up to this price level, price has been sort of bouncing and rejecting. Every time the price has come to this, it's been held up, right? You can draw support and resistance lines all day. Like there's a support level here where the price was being held up, which happens to also be the resistance level. If you were to draw a horizontal line across here, then down here as well, there's support and resistance. So historically, looking at this chart, you can see where prices have gone up and down, and essentially when price breaks through. So sorry, Troy. I'm trying to use my hands to record, but I think my screen isn't. So is that? Can you guys see me now?
We can see you and we can see the screen, bro. It's all good. You're sharing the screen.
So when there's a support level and there's a resistance point, when the price breaks through the resistance level and starts bouncing around, that resistance level now becomes support, and usually a new resistance level is found. And so when the price breaks through a support level, that level becomes resistance. So they're kind of interchangeable, but the main thing to think about is that resistance is above the price, support is below. And then after we draw support and resistance, so we can see here that this is a resistance point, and potentially up here where the candle wicked up here, there's another resistance level. But for now, the strongest level is up here where price is being held down. And then we draw in the trend line. So when we're drawing in trend lines, a trend line is subjective. So you can draw from wick to wick or body to body or somewhere in between. But you're basically just identifying an area where, or a line where price keeps bouncing. So you can see here, when the price fell from this height here and then came down here, it bounced back up, came back down, bounced back up. You can see like there's multiple touch points of this trend. And the stronger the bounce of the trend, the more it confirms that the trend line actually exists there, right? And so once you do that, you look at market structure. And market structure is basically figuring out where are the high points and where are the low points. So I'll just paste this in. Okay, so over here is our high level, right? That was previous resistance. And then there was a level where it went down, and then this is our low point, according to the chart. It went up here, right? Came back down here and started forming a structure in the market that we can follow. This area here, it's labeled HH, which is higher high, because this high point is higher than this high point, generally where the price was. Not by much, but you can sort of see it's a little bit, higher these wicks than what happened over here. And then it formed another low, then a high, then a low. And then this low point, which it's saying HL, which is higher low, because this low level is higher than this low level and higher than this low level. Does that make sense? So higher high, higher low. It's kind of like a zigzag, right? And then moving up here, it forms another higher high, because this high is higher than the previous high. Sorry, Ollie's waiting to be admitted. Okay, I'll put him in. And then, price moved back down. There was a higher low, because this low is higher than this low. Is everyone following so far?
Yes.
Yep. These two moves here, I've purposely skipped putting them in as high and high low, because overall in the general trend, you can see that, from this low point to where it went here, it did create another high, and this is a high low. But technically, this would be considered a higher high and a higher low as well, right? And if you were to drill in more, because this low point is higher than this. Anyway, so now that we've established market structure, we can look at points of where does the price bounce around. So you can see here that the points that are highlighted, the price came down to support, and then it was rejected here. So rejected meaning it didn't break resistance, and so it didn't form a higher high. So that's an indication to us that, okay, there's something happening in the market, right? You can sort of see that this level has been reached, and it's a ceiling that's not getting broken. And then over here, it sold back down, but then recovered back at the trend line, and then was supported again at this level here. And then now it's at a point where it's hitting resistance. Can everyone, everyone can understand that, right? So
sorry, Kev. Yeah. So I was so basically what we're seeing here, right, is a general upward trend. So like what Kev said, we express this as traders as higher highs, higher lows, higher high, higher low, and that trend line that's getting created below that market structure it becomes even more strong each time that those higher lows hit the trend line, right? You see how they're those first couple of higher lows and then the third one, they're all bouncing off that trend line, right? So when a trend line is strong is pretty much from 3 touches. So this trend line was pretty strong from the first higher low, let alone the next point it touched, and followed by the next point it touched. So this trend line and the general trajectory of the way that the market is moving is extremely bullish, and that's being told to us through some very simple things, which is those higher highs that are being confirmed and the general trend that goes up. And as traders, and you may have heard this saying, we always say that the trend is your friend, and that is because we move and we try and take our trades with the trend. And those points that Kevin has highlighted there are key points, because those lines that are there, so the top line, the top horizontal line, red line, which falls on around about $215, and the line, which is the black line, which falls on about $200, right? So the support lines are underneath price, and this resistance line is above price, right? And we can see the current price is just touching the resistance line there of $215. So we're at a critical point of the market right now, because we're either going to establish a new higher high, so we're going to push past that resistance and establish a new higher high, which confirms even more so of our bullish sentiment, or potentially we've kind of hit that roof of that resistance, where we may be squeezed into this triangle that's getting created. So you see that triangle that's getting created there. That's, you've got the resistance and the trend line, right? We could potentially get squeezed into this triangle. So when we see this, right, and if you're watching the recording or you guys are on this, maybe saying, well, that's all right for you and Kevin to say now in hindsight. Of course, we can see a higher high and a higher low and a higher high. But even if you, for example, just act as if all the candles have gone from the point of that second higher low, right? And if you can imagine that the rest of those candles aren't there, this line has already formed an upward direction because we've created a higher high, a higher low, and then a second higher high, right? And we've already created a very strong trend line already because we've already had more than 3 touch points before that second higher low has even been created. So once our second higher low bounces off that trend line, that confirms that upward trend. It confirms that the market's heading in an upward direction. And it would tell us that it's highly likely that after forming that second higher low, we are going to approach and create another higher high. So what we've talked about a lot here, and you guys probably have heard Kevin and I say this a fair bit, or maybe even me even more, is the art of probability, right? So we base all this on the art of probability. And the art of probability is that there's much more of a chance based on the trend going in the right direction, and remembering the trend is your friend, and remembering that market structure is being created. We're creating higher highs and higher lows. Much, much, much more of a probability of that market heading in that upward direction, and therefore we'll be trading along, or we're trading it long, so we're trading it as if it's going to make the price is going to go higher. Much more of a idea of much more of a chance of that happening and going up, as opposed to it breaking that trend line and dropping down.
And the other thing I want to add to that is, if you look at the price levels, again, looking left, looking at the history, right, over here where it fell down, look to the right, the price was around $250. It's a nice round number, right? So whatever the data is to the left here that we can't see, whoever bought at that point would have, picked that number. Okay, $250, cool. That's a nice level to take profit from. And then market went down. Notice here where it stopped around here is around the $200 mark. So again, another nice round number. And then it fell from there and then stopped here, which is roughly around $100, right? So
this is all psychology, guys.
Psychological numbers.
Psychological numbers. It's real. It happens in this.
Yeah. And so, knowing that the price has been there before, and knowing that we're on this, trend line moving up, then the probability that this is going to keep going up is a lot higher than the price going back down, especially given what we know about candles as well, like lots of green, long bullish candles here. Lots of formations happening, and the market structure is showing that there's more upside to this. There's more buyers coming in. So as we're getting squeezed into this triangle, the areas of interest that you'd be looking at would either be at the top here. That's if this candle, because I don't have a timeline on this, but if this candle was to break above here, then that could be a good signal. So break through and then close above here. That's a good signal that the potential move upside is moving here already. Or the other area of interest is going by the data, looking at where it's bounced off support, and as it's moving here, potentially somewhere around this area here, right, to bounce off the support line and bounce off the trend. So if I draw that structure in, this is the more ideal entry point or ideal way to trade. So looking in that area. So what you do is, using TradingView, you can set these lines, you can set alerts, so alarms that basically either send you a text message or an email or a notification on an app. So you don't have to stick in front of the computer like the whole time, like watching candles. You can just get an alert to say, okay, if the price comes into this area of interest, let you know, and then you can jump on a computer or on your phone and then look at what the market's doing there to place a trade. So that's pretty much what happened with this trade. So you can see here that blue area of interest, you know, there was a notification that came through that price is hitting around here, and then as it got closer to the trend, there's an entry point here. So this, in this case, this is a risk area, or a risk reward tool. I mentioned that before. What happened here is that, okay, on an account of what was this? I think this was around about 800, maybe $800. I can't remember. But what this is basically saying is, at this price point here, which was at $201.15, so just above the support line at the time, an entry for a trade was placed. If the trade went the wrong way and I got stopped out here, meaning my trade would have been cancelled and I would have sold my trade, then I would have, I think from $800, it would have gone down to $749. So I would have lost $50 or $51.01 or something. So this is a measurement. So 8.2% is a measurement from the entry point here. Is that making sense so far? So it's deviated down to 8.2%. That's why I'm willing to risk on this trade. Conversely, because my target is up here towards the $250 level, or just shy of that, the potential upside was for my account to grow to $1,657.60. So I think I can't remember if this was 1,000 or 1,200 or something like that, but basically the ratio is 2.63 or 2.63 to 1 in this case. So my one here would have been $50, my risk, and the reward at 2.63 would be, you know, just over $163. Is that right? Sorry, yeah.
Yeah, I believe it is, mate. It's late. And
almost a
done
3-to-1 trade. So it would have been, you know, if this was a 3-to-1 trade, it would have been $150 potential reward versus $50 potential risk.
So you guys are probably looking at this, and this is, once again, I know we touched on this about an hour ago and went off on a little bit of a tangent, which is fine, and it's all good. We brought it back, but you're probably, one of the things, there's probably a couple of things here. So the first thing you may be thinking is, all right, Troy and Kevin are starting to talk a different language and I've got no idea what the hell's going on. And the second thing is maybe that you, perhaps this may be you guys or people who are watching this recording are wondering, why has Kev drawn that that's his profit and that's what the loss is? Like, what makes it get to that risk to reward ratio that he's drawn up there of 2.63? And to answer your question, simply look left. Look left at why our target is that $244 mark, right? That's where previous structure was created. So that's the reason why our target is around that $244 mark, because previous structure and the history and the data that we have, once again, tells us that that is the next real level of resistance. If we can break through this $214, $215 mark, the next real level of resistance is 244. So we have that potential trade to push right up there to that 244 mark. Now, the reason why we've created our stop there and we've created a stop loss there of down to 184 is because if we can't draw the horizontal lines on this, unfortunately, because it's a screen. But our next support level, you could say, is around that $185 mark, because as where Kevin's red cursor's going there, you can see that there's a lot of price movement that's bounced around that area, and that is the next real level of support. Based on previous data, once again, like what we said, previous data tells us that around $185, because prices bounced around that point about 5 times on 5 different candles, that previous data tells us that that's the kind of next resistance level. So we're prepared to risk that 8.2% to make a 21.58%, which we don't just make those numbers up. We don't just go, cool, today we're going to make 21.58%. That 21.58% is created based on the data that we see on the screen, because the data we see on the screen tells us that it's a 21.5% increase to 244. And if we break down and drop down, it's a 8.2% decrease to the next level of resistance that we can see from what we've drawn up, which is 185. So that's the reason, and that's where that kind of 2-to-1 ratio and the 2.5-to-1 ratio, in this case 2.63-to-1 ratio, comes from. It comes from the data that we see on the screen, and we see that data by looking left and seeing where previous market structure hit and what's going on. And this will make more sense on the next screen that we're going to show you guys, where we're going to actually ask you guys to place support and resistance lines, which are our horizontal lines. And this will make more sense then, because you will start to see why we place support and resistance lines where we do. We don't just randomly close our eyes and, you know, pick a spot. There's a reason why we pick those spots, and you'll be able to hopefully start seeing that.
Yeah, so just to add on to that, the only random part about this is the exact, say, dollars and cents point that I placed the target on. So knowing that over here, you know, the price was around this level before, around $250, because I want to increase my probability of gaining profit on here, I put the target a little bit below $250. So in this case, $244.55, so that, you know, there's more probability of me being able to take profit at that level than potentially, like, what if the price didn't go to $250? That's where psychology and, you know, greed comes into play again. Like, I'd rather have, you know, the majority of a move rather than trying to target, you know, $250 mark and then yeah, and then possibly failing. Like that's essentially also a way to look at the wicks when you're looking at things. Like, the wicks are where there's less, I guess, solid sales or solid orders, and the bodies are really like where people are putting targets in and orders and that sort of thing. So on this particular trade, what I look at is the risk to reward ratio. I don't really pay attention to the percentages and all these other numbers. Like, don't let that noise get in the way. What you just ideally want to be doing is looking for trades that give you more reward than risk. And when the reason we also place stops in risk management, so this is, you know, protecting your money. A lot of people trade where they don't put stops, and they're like happy to just go, okay, even if the price was to break down here, go down this level, I don't care, I'm going to stay in the trade. But then what happens is that you're creating a bad habit and a psychological habit in yourself to think that, okay, the market's going to go up just because I feel like it, or just because my emotions are, oh, it's still bullish, it's going to recover or whatever, right? As traders, we want to make sure that we're removing our emotions from the trade, because the market doesn't care what we think. The market doesn't care, you know, about our emotions. All it is it's a reflection of the data and the numbers in the market. And so it's a safe and smart way to basically set a level where, okay, my rules are that, you know, I'm willing to lose, in this case, I think it was $50. I'm willing to lose $50 because I understand and I can read that the potential for me to gain is this level here. And I also know that there'll be other trades, right? Better than me not putting a stop here, and then at some point down here, when the risk to reward ratio is 1-to-1, that I lose my entire account. And that's what liquidation is. You know, liquidation means if you're in this trade and then the price goes the wrong way and you don't sell or you don't get out of that that trade, then it'll swipe your entire account and you'll be out of the trade. Oh, sorry, swipe your entire position that you've put in. But it's also possible to swipe your entire account. So yeah, we'll get into that later. So moving forward, so that was the trade that played out, right? Profit was taken around about that $244 mark. And then you can see here, candles kept playing out. And again, market structure was formed. You know, another higher high was formed, just under 250. Another higher low was formed. And then over here, a lower high was formed. So we're kind of repeating what happened here, except it was a little bit lower. And then a lower low was formed, because this low is technically lower than this low here or this low here, right? And also what do you see there is that the trend line was broken, right? So when the trend line gets broken, it's not an automatic signal to be like, oh my God, the market's, you know, going to crash and panic or whatever. It's just a note to let you know, okay, market structure has changed. There could potentially be a downwards trend here, which I'll draw in with that line. So a downwards trend potentially starting there. However, the stronger trend is still this bullish line, the black trend line. Can everyone see that, you know, the little green line is like a short trend, and that's something that if you're a day trader, you might jump into, you know, short trades for the day. But overall, if you were looking for larger swings and a long-term trader, you wouldn't necessarily trade within that space. And so in this regard, new market structure was formed, and then that trend, the downtrend, was broken over here, and you can see the price started climbing back up to meet the trend line here. So if you think of trend lines as magnets, they're just levels that the price fluctuates along. Like what's the most, you know, probable level, or the average level, you could say. And then moving on, so you can also see, you know, there's this triangular formation here on the largest time frame, and then also there's this triangular formation here. And so based on the data at the time that I was reading on this, see how this level here is flat? So then this level is forming another, like an internal support level. And that's indicating to me that, you know, people have tried to sell, but there's still more buyers coming in. There's these wicks on the downside that are still pushing things up. So potentially that was another trade that played out, or there's potential for another trade. And I'll move on to this other chart, which is Bitcoin, around about the same time, right, as Ethereum. And what can you guys see here? It's the pattern or the shape is pretty much the same. It's on this uptrend that you can draw. There's support and resistance there. There's market structure that's created. Similarly, higher highs, higher lows. And then, you know, market structure changed to an internal trend moving down, but essentially the price is still being supported by this line, which indicates to me that regardless of what chart you're looking at, the patterns are the same, the market structure is the same. When you're looking at them like relative to each other, I'm not saying the price points are the same, because like obviously here the you know, the price is a lot different. This was when Bitcoin was hitting $10,000, and basically another potential trade was played out there, right? And then yeah, moving on, there's another, you know, internal trend here forming. There's another kind of triangular formation, so on and so forth. You end up becoming what I mentioned before, as a pattern hunter. You're looking for these shapes and patterns playing out cycles over and over again, regardless of the time frame that you're looking at. And then in this,
yeah, sorry, you're right. No, you're good.
So in this particular trade, just as an example to show you of how you can make money on the way up. So this was trading here at this point. This was a look at the ratio here, 3.93, so almost 4-to-1 trade. And then also trading on the way down, doing a short. Like there was a pattern here that was forming that was a descending, you know, triangle descending flag that broke, and then there was a trade, you know, placed there, and it's all bouncing around between these support and resistance levels that we've been talking about. This trade was a longer term trade that played out, sorry, the initial trade that happened here was a longer term trade, because that was in a daily candle, right? So this took a few days to play out, going from this trade to there. Whereas this small thing here, that's why I've zoomed in. I can't remember the time frame. I think this was 15 minutes. So these trades played out in a matter of minutes, you know, on these candles. So what I'm trying to illustrate here is that going back to the trading styles that we spoke about, depending on your risk tolerance, the time that you have, and your trading style, there's trades to be found whether you zoom in and zoom out. But the main thing to keep in mind is the zoomed out perspective when you're looking at you know, monthly or weekly or daily charts is what to go by first. It's what creates your bias, and then you can zoom in further to, you know, 4 hours or 1 hour or whatever. But always keep in mind the bigger picture. Your bigger bias is what drives the market. The psychology drives that. So
I just want to quickly say, sorry, mate, just to quickly say before we kick on, so if you are if you are watching this and you're feeling a little overwhelmed with everything Kevin's just downloaded onto you, then just look at it this way in regards to patterns. If you're finding that the information, because once again, what we're telling you guys is 20 hours worth of information jammed into a few hours. So, yeah. So and when it comes to patterns and things like that, yes, they are important. Yes, they do play out. And yes, it happens time and time and time again. But something and a key thing that I think we'd really love for you guys to take away from this, and we're going to touch more on this in the support and resistance and the other things, are literally that, right? So you've got support and resistance lines, you've got market structure, you've got them creating a higher, 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 low, higher, 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 low, right? So we've got an upward trend. And then on that previous chart that Kevin just had, you've got, you saw that the upward trend was broken. And then what was created was a lower high, a lower low, a lower high, a lower low. So what you had was that uptrend, and then you had that trend broken, right? That trend was broken. If you look at the Bitcoin chart, the trend was broken when that red line went straight through it and dropped down. Now, it's no coincidence that it dropped down to a previous level that was a fairly strong level. Like if you look horizontally, there's a lot of price action around there. Yeah. Exactly. If we're looking left, there's a lot of price action, and it's bounced back up of that. But because it hasn't pushed back up above that previous high, it confirms to us that buyer momentum is slowing down, and buyer momentum isn't as strong. So therefore, each time we try to push up, we're hitting this roof of resistance, and it's falling back down. And then it tries to push up a third time, and it's even lower than it was the previous two times. So this is an absolute confirmation that we are on a downward trend. But the thing is that even though it is a downward trend with each of those pushes, there's that key level, right? That key level of support that's there, that has been there for a long time, and it was holding true that entire time. So even though we were on a clear downward trend, as a trader, we're looking at that and just waiting for an opportunity, because we can see that it hasn't fallen out of the sky. If this was going to turn into some crazy bear market, it would have broken through $8,800 and fallen down to 6,000 or somewhere crazy, right? But it hasn't. For each of these candles, let's say each of these candles, they represent one day. For like a period of a month or a month and a half, it held that $8,800. It held above it every single day. So therefore, in a trader mindset, we're like, yes, we are in a downward trend, but we are not concerned whatsoever as far as this thing dropping out of the sky, where most people would be like, oh my God, nearly 2 months has passed and it just won't go past $10,000. We're never going to make it past $10,000. It's just not going to happen. And all Kevin and I are thinking, and other traders are thinking, is how good's this, that the price has been held above 8,800. This is sensational. For literally a month and a half, it got held above $8,800, which was a key level of support. So now all we're doing is quite simply just waiting for it to break out, because we know it's going to break out. If it's held price for a month and a half to 2 months above $8,800, that is quite clearly a massively key level of support. So we're just waiting for a breakout. And as soon as that breakout happens and you get that first green candle and it clearly breaks that downward trend, that's when we place the trade. We place the trade there. Well, that's when I would place the trade. I place the trade right there, because that is a clear breakout of the downward pattern we have. And the other data that I have on top of that is that we have held $8,800 for like 45 days. So there's much more of a likely scenario that we're pushing on up. And what happened? We pushed on up. So it's just about changing your mindset and the way you think, right? Whereas previously, and I would have thought this way 3 years ago, in June, it was at $12,000, and now we're in the middle of July and it's down to $8,900. This is rubbish. It's never going to get back to 12 again. I'm just going to sell and get out of this. Because before you know, it's probably going to be back down to 6,000 like it was 2 years ago. But if we're looking at structure and really basic stuff here, is that it's clearly held above 8,800, which is a clear level of support. So we're just waiting for it to break out, which I'm not saying it's always going to do. But once again, the art of probability tells us that there's a hell of a lot more of a chance that it's going to do that than it's not. And what happens? It breaks out. And what happens next? It has this massive push up well past $12,000, and it pushed all the way up to 12,800 and so on. It just went on from that point. So it's about patience, and it's about trusting what you see and what you learn, and keeping an open mind about what you see and what you learn. So yes, the triangles that Kevin talked about are just another confirmation on top of what we're seeing here around market structure and around support and resistance and around trend lines. But if you break it right down to just the bare bones, and not even talk about triangles, we can clearly see that there's going to be a breakout there, purely based on the market structure and the way that the market's trending. So that's a lot of downloaded information in a short period of time, but I hope that makes somewhat a little bit more sense of the way that we think and the way that we've got to train our brain to think.
Yeah. Yeah, I just wanted to show, like, when we talk about triangles and squares, it's not that we're talking about literal triangles. We're just talking about like shapes that the candles form and bounce around. I just wanted to make that clear. You know, I'm a pretty visual person, so when I see candle formations there, I just basically imagine what are the shapes being formed behind them, and each of these shapes tells a story, and it has a particular way of being traded, and so that's an additional confirmation on top of the market structure that's being formed. So trading, you know, support and resistance. Even if you just knew support, resistance, and trend line, you could already go into the market and be armed with that and have a higher probability of making good trades or good trading decisions versus, you know, other people who don't know that. And that's not even looking at patterns. That's just support, resistance, and trend. Another key thing to keep in mind with cycles is price moves up, price moves down, or it can move sideways. Those are the three different directions that the market can go. So if you're informed enough to know when to notice market structure changes, to go, okay, over here we were moving up because market structure was saying that, was telling us that. Over here we can see now we're moving sideways, so there's a way to trade sideways, and then obviously moving up again, and then zooming in here, this is just an example of, okay, we see the market moving down. There's also a way to trade that. So up, down, left, right, sideways, whatever. As a trader, we're looking for those opportunities. So, you know, going back to, we were talking about, say this was a euphoric stage in this short term where people are like, oh, look, Bitcoin's broken up above $10,000, and the uninformed or the dumb money comes in, as Troy was mentioning, buying here and then selling and going, okay, it's going bad, it's going bad. As a trader, we're like, this is great that it's going down because we're looking for a bargain to buy in. It's better for us to buy in here at a lower level than to say have bought in here at 10,000 or even at this level and basically missed out on this level of you know, potential gains. Also, it creates more risk for us. If we were to buy here, our stop loss level would have to be below market structure here. So we're like in a risky area here. Whereas looking for a bargain down here means our stop loss would be under market structure here, which gives us more reward in terms of the ratio.
We're much more confident on that stop loss because, like I said before, it held that mark for 30, 45 days. So yeah. I'm extremely confident that the stop loss to be placed under there, because I mean, it'd have to take an extreme event for it to drop under that, considering it got held for such a long period of time.
Yeah, so you know, we're again keeping in mind we're trying not to lose money. So the mindset has to shift from how much money can I make with this if I make a really huge risk reward to how can I protect what I'm putting on the table. You know, how can I protect my risk? How do I not lose it? So you have to give yourself some leeway when it comes to risk, and go with the most probable outcome of not losing that money versus thinking of how much can I gain if I enter the market at a certain point. So I think we'll head into either a break or a section now, depending on how everyone's feeling. I wanted to introduce Kjartan, who some of you already know, and the next module that we're going to be doing in this is basically going in for a live trade. We'll go through the candlesticks and how to place a trade, and hopefully I can put something on there so you guys can see how easy it is to do that. But prior to doing that, I want to basically give Kjartan the space and time now for us to go into like the mindset stuff and sort of, digest everything that's just happened, and then help clear out, some brain space and energy for the next section. So I won't do another intro because people would have seen that from the previous calls already, hopefully. But for anyone who hasn't seen the previous calls, Kjartan is like brother from another mother. He's been part of this journey with me in crypto as a friend, as a business partner, an investor, a contributor. If you go back to the original slides that I did with the resort, he was right there. He's dug holes in here and helped me build things here and planted things. We've traveled the world from Africa to Norway to LA to Australia, and he's been instrumental in, keeping me sane basically along this journey. He's had 10 years experience as a coach, so mindfulness coach, and guiding people with working with the mind to release blocks and uncover things that you don't know about yourself or that you've been, keeping at bay. And he works with teams and high net worth individuals in crypto, in creativity, in all walks of life and business. And he basically helps people give a deeper context into understanding specific tools that they can use for themselves to, have a better understanding or better comprehension of how to move forward in whatever it is, not just crypto, but life or education. And so, yeah, especially in this regard, the reason, I'm really grateful for him being here is because similar to what we were talking about before, Linda working with Tony Robbins and such, like when you have people in your field who are mentors and colleagues that have been down a path that you may not have explored yet, but, they've shown the results of what going down that path can achieve for you, then it pays to listen to those people. So over to you, Kjartan. I'll turn your camera on. Sorry.
Should we maybe, if everyone, you don't have to, but if everyone, just so we can get a connection here, everyone wants to turn their cameras back on. I know Kevin killed everyone's cameras because of his internet. I don't know if you've got to give people access to do it. Don't feel like you have to turn your camera back on, but I think it'd be good if you guys could or wanted to.
Yeah. Thanks for that, Kevin, and for anyone listening in on the recording. It's kind of we didn't fully plan anything other than kind of get a loose skeleton for a contribution that I can make during the call. I think it would be good maybe to have like a very short break, like have a sip of water, maybe go to the toilet before we continue. If your time schedule allows that, I think that would be good. And then really we've been again downloading so much information, and I think to kind of condense that into a chunk of or a bit of information that we can digest, we're going to do again a little like a similar meditation to yesterday. And especially since we're now going to watch Kevin actually do a live trade, I'm gonna so similar to yesterday where we scanned through the body and we got into a very relaxed state. In that state, I'm going to make a couple of suggestions. I'm going to throw in a couple of words so that we can prime our minds to be ready to be in this, who am I thinking as? We're not a random person throwing money at a screen. we are, we got to put our investor hat on. We got to, what am I looking for? The mind is primed for what we're actually doing. So I think that will be the most beneficial thing we can do during this call, as we're gonna then go live into watching Kevin.